I'm Greg Hunter. Welcome to USA Watchdog.com. With us, a world-renowned expert in geopolitical and financial cycles. I'll just bring him right on, Charles Nenner. Charles Nenner of the Charles Nenner Research Center. Charles Nenner, thanks for joining us today on USA Watchdog.com.
Well, it's nice to talk to you again. There's a lot happening.
There is a lot happening. I want to go back a little bit with the interest rates. Back when you were on the, I don't know, last time, I think you said, I think we were at a solid 30-year Treasury note that was above 3%. And then the 10-year was threatening 3%. And everybody was thinking interest rates were going to go up. And you came on and said, no, they're going down. They're going to go down. Did I tell you they're going down? And they're going to go down. And sure enough, now we have our 30-year Treasury note below 3%, 30-year money below 3%, isn't it amazing? And then we have the 10-year Treasury below 3% also, and there's only 10 basis points between the 10 and the 30. You said they were going to go down, and sure enough, they went down. Well, let's start there with interest rates. Have they bottomed out here in your cycle work, or are they going to go lower from here? What say you?
Well, we're going to hang around for a couple of weeks, but definitely into later this year, the interest rates are going lower. It could be much lower. It seems that nobody really is paying attention. We did work on all kinds of economic indicators, and it showed that that employment is not going to be as good anymore as they think. Inflation is not going to be as strong as they expect. The commodity index is breaking down. Copper cycles are down. Crude, I don't have to tell you, cycles are down. And soon everybody's going to wake up again and says, hey, what's going on? It's very interesting how short-term Wall Street is approaching all the indicators. They go from one Wall Street Journal article to the other Wall Street article and hoping and fearing, but they don't do their homework. So if you do your homework, then you see that everything actually looks like the economy is weakening, which is interesting because I was just looking on the television on CNBC at the Congress hearing where the Fed chairman says, no, the economy is going to be much stronger and the unemployment is going to be lower.
And you're saying you're taking the opposite side of that trade, that the economy is not going to be much stronger and employment is going to be higher. You're saying the opposite of what the Fed's saying, which may not be a bad play.
I would like to ask the Fed, so where do you see it? How do you calculate that? I mean, I wrote an article about most people that have a function in a higher level are maybe in the 60s, 70s. So they remember always inflation. And we hear this already, how many years? 5, 6, 7 years inflation. And there's still not much inflation. And they don't do the historical work, but they remember there was always an inflation problem when they were in the business. So the only thing they can talk is about inflation. And I don't see it till now. So that needs a different approach if there's not going to be inflation.
So you're saying deflation is going to be the order of the day. And when you say deflation, you're talking about bonds, housing prices going down, I guess mortgage-backed securities getting destroyed. Bonds like Puerto Rican bonds are not going to be payable. Is that what kind of deflation you're talking about?
Well, let's think together. You know, interest rates are still pretty low if this expansion is finished, and still the Fed talks like it could be continued, I don't know, forever. Well, this is the longest expansion. Why do you think, this time is going to be different? And if you start with this low GDP and interest rates, and then you get in recession or depression, you definitely get into at least disinflation.
So you think we're going into, you mentioned the deflation, depression mode. Do you think that's what we're headed for this time?
Yeah, I've been saying that for many years, and that's what I think there is still the Kondratiev cycle, long-term cycles. I mean, we're going to hyperinflation, but first we're going to have a deflation scare.
Explain.
Well, there was a Mr. Kondratiev, a Russian genius, and that's actually about between 55 and 60 year cycle. And it works pretty well, and that's the longest deflation cycle there is, and that still has to bottom. So we still need one more scare of deflation before we get into real big inflation problem. We're going to have it, but like everything in investing, it's a matter of timing. So it could be a couple of years away.
So you're saying that they don't expect the deflation, expect the debt destruction, the inflation, expect things to deflate, expect bonds to be destroyed, the debt not being paid. That's true deflation, correct?
Well, that's going to be very extreme. For the moment, I think bonds are going to be okay. The problem is, where do you invest your money in a deflationary period? There is a very interesting book that I can advise. It's called The Long Wave, and it talks about inflation, deflation, economy starting in the 1600s. And to get an idea what the best way is to invest in deflationary periods or the periods right now, you really have to study and read the book. It's a big book, but you have to know historically what's going on.
Let's talk about gold. A lot of people are disappointed that gold has not taken off. That it's been, I think one of the articles on Zero Hedge said it was monkey hammered below key support, gold and silver. What do you suppose is going on with all that?
Well, maybe you remember we sold gold at 1365. The target was 1212. We sold silver with a target of 1540. I think silver reached it today. I think gold is almost there. The cycle is still down. If it doesn't hold these levels, we're going to cover our shorts. We have done very well, big profit over there. If it doesn't hold there, then we get much lower price targets. I cannot tell you right now how low, but cycles are still down, so anything can still happen. One example is what happened in crude. Crude had a cycle top actually today, and a price target of 75. So we sold everything at 75. And the cycle was a couple of days early. And look what happened. The whole thing collapsed. So if cycles are down, you don't want to be long whatever happens. So you don't lose money as long as you go in the right direction. And cycles continue down, I think, into October on silver and gold. And if gold breaks below 1212, we get much lower price targets.
There's a lot of people who think that. Of course, I've heard this a lot from people, but they're saying this is the year that this is. Several people think that the perfect storm is brewing. You got the Fed raising rates into what is obviously, just like you said, it's not such a good economy. The yield curve is only 10 basis points, which is flashing danger, danger, danger. And they're saying that this September-October timeframe could be trouble. What say you?
Well, it could be. I agree with that. That's all I can say. I agree with that. Looking at cycles, that we're going to be in a difficult time, and as you know, the cycle top for us was the end of December last year, the beginning of January. We're totally out of the market, and we expect to be in a difficult market for the next couple of years.
Do you think the market sell off pretty hard if the Federal Reserve keeps raising rates? I mean, if they raise rates another quarter basis points, I mean, they could flip the yield curve, right? They could invert it, couldn't they?
Well, we approach things differently. When the cycle was stopping in December last year, then everything still looked what they called Goldilocks. Now, since then, we have a trade war, whatever they call it, problems. You never know what's going to happen. So I don't know what's going to happen. I don't know what the Fed is going to do, but it's not going to make any difference.
In other words, the cycles, we're on the way down. The cycle's just going to have to is turning, and we're on the way down. Is that what you're saying?
Yeah, and something will come up again, and then later we understand why the market came down. But anything can happen.
Donald Trump, you're over in Amsterdam right now. Thanks for joining me, and I really appreciate you doing this. But you have kind of a European frontline perspective, and you're saying that the tide has turned for the people in Europe. Europe is looking at Donald Trump, going, "Hey, wait a minute. Well, what are you saying that crazy?" And tell me what your perspective is, what you think the people are thinking about Donald Trump in Europe. He's just been over there talking about NATO. He just had the Helsinki meeting or summit, whatever, with Putin. What do you think's going on in the hearts and minds of the people, or at least the minds of people over in Europe?
Well, it's interesting. Half a year ago, a little bit more, they brought in psychiatrists to discuss the character of Trump. And now, since he was here talking about NATO, they had to cover the facts. And they had, for instance, the Prime Minister of Holland and Luxembourg and Belgium says, okay, is it true that you guys pay a little bit more than 1% and not the 2% that you're supposed to pay for the NATO expenses for the last 30 years? And they said, yes. And they said, so why did you pay it? They says, well, you're right. Different American president has mentioned it, but nobody ever forced us to pay. So they say, isn't it crazy that the United States is defending you and you don't pay up? So they start looking at the facts. And interesting was, I know they're all in a revolution the mode now in the United States about what he said with Putin. But here you read some facts, and probably also in the United States. I'm now in Amsterdam. But listen, the question with the 12 so-called Russian hackers was known for many, many months. And the fact that it was just brought up by Rosen, what is his name?
Rosenstein.
Rosenstein, exactly the day that Trump is going to meet Putin. That's a strange fact. And so I think that Trump has a point. And here we say, at least, well, this is a strange point. Maybe they should explain why they have to do it exactly the day that he is going to see Putin. So they start looking a bit on the other side instead of saying, that Trump needs a psychiatrist. What are the facts? And does he have a point or doesn't he have a point? And when both sides come to the table here in discussion points on television, then the people who says he has a point usually have now a better, the hand is better because the other ones actually don't have a point to say he's not correct. So it's very interesting. For instance, I looked at cars. If you buy a Porsche in the United States, it's about 50% cheaper than in Europe. So I guess he has a point, right? So of course, then the deficit if the economic exchange would only be in Porsches, then of course Germany has a much better balance than the United States. They don't do that for the United States and Europe. So I think the fact is that it should be balanced. Then why should it be so cheap in the United States? So I don't really get all this hysteria. And people start looking, not that they're crazy about Trump, but they start looking at the facts. What he says is it nonsense and nonsense. Now, the fact that this guy, I forgot his name, that is this Congress hearing Turk or whatever from the FBI.
Mueller.
No, the guy that was questioned by the Congress.
Oh, Peter Strzok, yes.
That made such a bad impression. If you look at his body language, he seems like so much non-reliable person. So things are changing.
You think people are changing and coming over to the Trump side? He also talked about all the immigration that has wrecked Europe, and said that Merkel made a mistake with all this massive immigration, which brought massive crime, which they're trying to shut up with the press over there. They don't want the real stats to be known about all these rapes and crimes and stabbings and murders that have increased exponentially, along with the import of all these immigrants that they've got from everywhere.
What I don't understand is, not that I want to work for Trump, but they don't bring the question to the table like it's correct. Let's take the problem with the Mexicans, okay? Now, it's not that they hate Mexicans. The question is, if you have a family and you have a great job and you're established in Mexico, you don't go cross over the border and be illegal, which means that whoever is not established and a balanced person, other people are coming over. But that's an argument I'm still waiting to hear till now.
So you basically we're getting the worst of the worst in the country that can't take care of themselves.
Right.
And the taxpayers have to take care of them.
Well, in Amsterdam, we still don't have enough housing because in the World War II, the Germans bombed everything in Holland. So the people are waiting a couple of years to get a house. They can't find an apartment. So now the apartments that become available go to the foreigners. So it becomes a big stress situation because why should the foreigners get the apartment here a couple of months and the other people have to wait for another 10 years to get a house? So it starts to be a tense situation.
And I guess that's people are looking at what Donald Trump is saying about the immigration going, hey, he's got a point.
Yeah, but why can't he make the point that, of course, the best of the best stay in where they are? Yeah. They have a family, they have a job, they have connections. They don't come like trying to cross the border and see what they can do in the United States. I never hear that argument.
What do you think about the meeting with Putin and Trump? I mean, over here it's mass hysteria. Paul Craig Roberts wrote an article about his crime was trying to make peace with the Russians, and he's got a good point. You got somebody who's a nuclear-armed country that can destroy your country 10 times, and you can destroy them 10 times, and 90% of the nukes are owned by two countries, the USA and Russia. And I think it would be a good idea to talk to them, don't you think? At least figure out what's going on, how they can make some agreements.
Well, me being a foreigner, I see things from the outside. I just gave you an example in 9/11. people are flying an airplane into the World Trade Center, right?
Hmm.
Now, I wouldn't dare to do it. You wouldn't dare to do it. But what we call them cowards. So the Americans still have this Indian and cowboy attitude. You got the good guys and you got the bad guys. They always need that because that's the view how they see the world. So the Russians are the bad guys. You can't talk to them. And the Americans are the good guys. Now, what the Americans don't understand is that the whole world doesn't think that they're the good guys always. And that's why not the whole world does like the Americans. You know, to come here and to feed people the McDonald's and give them heart diseases and whatever, bring all the nonsense television programs to the rest of the world. We don't like that. But the Americans say, we're the good guys. We know what the moral thing is to do. We have the choice of morality. We're the good guys. So I think there's so much stuck in good guy, bad guy, Indian and cowboys. So the Russians are the bad guys and the Americans are the good guys. And you can't change it.
Well, there's plenty of people over here too, like me, that say that's a good idea to talk to Russia. I mean, Russia. Putin blurted out that they weren't expecting this. That Hillary Clinton got $400 million from intelligence agencies, from intelligence operators, got $400 million dumped into her campaign. That basically was illegal money. $400 million from U.S. intelligence people.
Really? I see that.
That was something that came out that got blurted out. And I thought, holy smokes, wow, that's just unbelievable. Well, are we getting? You're an expert in cycles. Are we getting into a cycle of economic strife, of lower stock prices, higher bond prices? We're going to run into the Treasury market. Wilbur Ross was just forced out of $50 million or so, up to $50 million in stocks. Evidently, he'll be buying Treasuries. That's going to be a good play. I mean, people are going to be scared. Is that where the cycle is? That the Goldilocks thing, as you said, is over, and we're going to get into a more rougher sell-off type phase of the markets?
Yes, that's what we're going to have. And based on the cycles, sometimes they have a big down move, and then they try to put it back again so they can sell again. That's what I expect. The China market is doing badly. Nikkei doesn't do anything. Europe doesn't do anything. Some blue chips are still doing well in the United States. And the market will hold up until the cycle's still down, turn down after the summer.
Oh, and what about gold? I wanted to get your gold perspective. I probably people are gold and silver. People wanted me to hit that a little harder. You said that gold wouldn't go up for a while, that you had a high of 1360, something like that. And then you said it wouldn't go up till after the summer. Or do you think gold is going to enter a new bull market? Could you explain what you're seeing in your cycles?
Well, gold is going to enter a new bull market. The first cycle's bottom, like I said, after the summer. That's August, September. Some more cycles in October. So we can still, like I said, it's very important. 12 is our downside target. If it hangs around there and it's after the summer, then we probably give a buy signal. If it breaks, then we come up with a lower price target. It definitely is going to make a new bull market. I mean, it is in a bull market, even although it came down from 1900.
So you still think that the on a long chart, when it was 280 an ounce to now, it's still 1200 something an ounce. So you're saying we're still in a bull market phase?
Correct.
And then you're saying that this is going to start picking up again in a matter of months, unless it hits. You still have some rocky period, but you think we're going to continue the bull market phase in gold?
No, it's going to pick up. It's going to pick up anyway in a couple of months. The only question is it going to be from 12.12 or from a lower price target? So I know some people that watch this sometimes ask to see our research, and if you follow the research, then we hope to get you the cycle low. And as you know, the cycle low and the price target usually comes at the same time. So for now, we're covering the shorts, and we wait till the cycle low is there.
But if you're a holder of, I had a woman write me saying that, opining the fact that, some people said it would stay at 1240 and it didn't, and I'm kind of worried it's going to go down from here. If you already have your gold coins in hand, you wouldn't be a seller?
Well, I tell you what the problem is. Our research comes up with cycle tops and cycle lows. And the problem we have with newcomers who don't have seen the research for many years, is, okay, we say gold goes down from 1365, let's wait and see. And then it's 1340 and 20, and it says, well, I'm in there for the long run. And then below 12, 1300, they start being worried. So a lot of people will say, I don't mind, I'm there for the long run, usually sell out at the worst point. So usually I don't want to give an opinion. I tell you where to get in and where to get out. In the middle, it's uncomfortable.
But you wouldn't, so you wouldn't give an opinion to this woman saying, I told her, just hang on, hold your gold, it's going to go higher. We're 21 trillion in debt. We're missing 21 trillion, according to Dr. Skidmore. It's $42 trillion we're missing. I mean, we're in debt or missing. How can you not have some kind of exposure to something real as opposed to all this currency that's been floating around out there? I mean, we got a lot of debt in the world. I mean, they said that debt grew another $8 trillion. It's something like $240 trillion in the world in debt. You would think that you'd want to hold on to something that was real.
Yeah, but my experience is there's a very big emotional factor in investing. And usually these people sell out at the end of the bear market, because then papers take over, says, oh, the gold bull market is over, and then they can't handle it anymore. So 99% of the people that says, I'm going to hold on to it, always sell because they cannot handle the pain anymore.
But you would be a holder. You would just, looking at your cycle work, you're thinking, wow, we're somewhere close to the end of this down cycle in gold. That's what you're saying. We're close. It might go down to 11 something, but we're close to the down cycle finishing up in gold. That's what you're saying. Is that right?
If I really would know that these people put away emotions, I would say yes.
So you wouldn't be a seller?
Not now, no.
Okay. All right. So you're just saying, all right. I know you don't want to give people sweeping advice because you don't know how well they're positioned and how much cash they have and how much income they have and all that. It's very hard. People say, what should I do? I say, well, I don't know. I don't know. Do you have your car paid for? Do you have good tires in your car? I don't know. You know what I'm saying? I don't know your whole deal, but you're saying we're near the bottom of this long cycle from 1900 to here. We're near the bottom of this.
Pretty close.
Very
but
close.
Not yet. A couple of months. Again, if we break 12.12, God knows what's going to happen. Could have another $200 down also.
Okay. All right. And then, and where do you think it'll go? Where do you think it'll go when the cycle starts picking up?
It still should go to 2,500.
Oh, you're looking at 2,500.
Correct.
And what's the time frame of that cycle?
About 2 years or so.
Wow. So you're thinking that we could get to 2,500 in about 2 years. Wow, there's going to be a lot of strife going on if gold's 2,500. Am I wrong?
To tell you honestly, I don't know exactly what the word strife means.
Well, I mean, a lot of angsting, a lot of nervousness, a lot of fear.
There's a lot of fear going everywhere. If you look what happened at corn and soybean prices and crude oil prices, and I mean, it's not interesting for most of the media to write about these things, but there's a lot of fear everywhere.
Why do you think that is?
Why do I think it is?
Yes.
Well, to be honest, and I hope they don't listen because they will not invite me anymore, I simply think they don't have the knowledge that's needed to look at the whole picture. Because they should look at inflation, deflation, also what food prices are doing. I'll give you one example. The Arab Spring started in Tunisia because there were fires wood fires in Russia, and that made the wheat prices go through the roof. And then the Arabs could not afford to buy wheat anymore. And then they started the revolution, which spread and ended in the what they call the Arab Spring. So if you really want to know what's going on, follow the money, but you have to follow everything, not only stocks on Wall Street.
And what about your war cycles? I sort of kind of wrap up with that. That seems to be on a back burner, but I know you're a big cycle long-term guy. But that doesn't mean that you were wrong. It just means that we're in, it's just simmering. What's going on with your war cycles?
We still have a couple of years. If we get to 2022, 23 without any major calamities, then we survive the cycle.
But explain that. You think that there's a good possibility of having a major calamity in the next 4 years in the war cycle. Is that right?
Yeah, because it ends like 2023. It started in 2014, 15, and you see everywhere in the world having all these wars. It didn't turn out to be a big war, as it should be according to the cycle, but we still have to go another 5 years and it can still end up being a big war. But if we survive the next 5 years, it's the same thing as gold. If we survive the gold price collapsing for the next couple of months, then we start a new bull market.
And with the war cycle, you're thinking that the next 5 years are critical, that we could.
Well, critical started to be in 2014-15 till 2023.
So we're at the end of the time that we could have a whopper war coming up.
We're in the middle between 2015 and 2023.
Could we have a war with China? I know you were talking about defense stocks perking up over in the Asian areas, in Japan and Korea and China, whatever. You're saying that was the hottest of hotspots. It's still a hotspot in China.
I tell you honestly, I haven't been following them for a long time.
So you don't have, okay, no. And what about the Middle East? Anything on the Middle East that you see? It looks like Putin and Trump are going to work something out to where they're not going to come to blows, it looks like.
Isn't it interesting that they're both defending Netanyahu? I mean, it's very interesting. It never happened before. I think only in 1948 when they established the state of Israel, but that the Russians and Americans agree on the safety of the state of Israel is very interesting.
I think that is. It came out in their thing that they were going to, in their meeting. It came out in their meeting, which I think, the U.S. wants Iran to leave Syria. And, they've been a big ally of Russia. Since Donald Trump got out of this deal, which was totally false deal, nobody signed this deal, this Iran deal. Nobody, I mean, not the U.S., not Iran, not Germany, not the U.K., not France. Nobody signed this deal. And he pulled out of it, and now there's major calamity going on in, inflation and riots and things going on in Iran. Could this be a hot? Go ahead.
Don't underestimate what's cooking in Turkey with the lira and what's economically. I mean, we could have a big revolution if things become a little bit worse over there.
So you're saying Turkey could be the hotspots in the Middle East? Yeah,
that's a big place, and the very extreme groups over there, and things really don't look good.
Okay, well, I thank you. I really appreciate you coming on with the interest rate thing. You think the bond market, so let me just sum it up. Gold's in the process of bottoming, and it could be another couple $100 down, but don't worry, it's going to go to 2,500. The bond market is looking good for the moment. Rates are going to go lower. Is that right?
Correct.
And you think that the hot spot that you are looking at is Turkey, not Iran, and not China for the moment?
No, that is already in the books, but the next one that nobody's paying attention to is Turkey.
Turkey. Oh, Turkey's the next hot spot. Okay. All right. Very good. I love listening to you. You're a smart guy. And Trump, you think Trump, I'm just going to ask you think Trump gets reelected?
I think so.
You think he gets reelected?
I think so. I think people are getting used to the way he does it. I don't know what his approval rating is at the moment.
I don't know if I believe any of that stuff because they lie. They lie all the time.
Yeah, I think it's kind of funny that there's a new approach to politics, and maybe people say, hey, it's not such a bad, it's a very pragmatic way of approaching. I mean, McCain is from the old school, and he still shouts a bit here, shouts a bit there, but he doesn't get anything done. And Trump gets it done, and I think that people get used to it.
I got to tell you that, and you think that the tide is turning in Europe, where people are like, hey, wait a minute, this isn't so crazy.
Well,
right?
Especially if Mueller doesn't come up with anything. I mean, it's really very strange that I also said heard in the hearing that this as well. Mueller's doing great because look at all the people he is indicting, but it has nothing to do with the Trump situation. I mean, it's very strange the way they approach the situation.
Yeah. Okay. Charles Nenner, thanks for sharing your research, your brain, your cycles on geopolitical and financial stuff. It's very interesting, and I mean that as a compliment. Very interesting to listen to you because you're about half the time you're about polar opposite about everybody else, and then you're right, which is a big deal. You said interest rates would go down, and sure enough, you were right. And I got to give you a little, pat on the back for that. Everybody was thinking rates were going to go sky high. You were like, no, they're going to go down. So,
I just want to mention that our investment on the zero coupon it's up 10%. So you can also make money on the fact that you bet on interest rates. You don't have to wait for the stock market to do something.
Oh yeah, one other last thing. I got to bring this up. You're in your research. You're starting to cover Bitcoin, and I just want to bring this up for the Bitcoiners out there. Your cycle about Bitcoin, it's not a very long. It doesn't go back to like the 1900s. I mean, it only goes back to 10 or 15 years. And so, but your cycles on Bitcoin, you're not. Bitcoin's got some work to do. Bitcoin's got some trouble ahead of it. Tell me what you think about Bitcoin then before I let you go.
Well, I think it will just dip below 5,000. I think 4,800, and the next cycle low is the beginning of next year. But then to get these movements again, it's not going to happen. Just remember there were people who lost money in gold in the crash starting in 82, I think, 81. And they always wanted to make the money back in gold, and it took 20, 30, 40 years. So don't expect the same thing to happen, because cycles don't look like that. It's not going to happen again for a long, long time, these big moves. Now, if you will have moves of 2, 3, 4%, maybe 5% in a couple of months, it's something. So the game is over if you look for big boom markets or bear markets.
So you're not going to see Bitcoin at 20,000 again, 40,000. You're not going to see that again.
It's going to take years if it still exists.
Okay. All right, Charles Nenner. Thank you for joining us today on USAWatchdog.com. It's Charles Nenner at the Charles Nenner Research Center, charlesnenner.com, Nenner, Charles Nenner. Charles Nenner, I'll put up your links. Thank you for joining us today on USAWatchdog.com.
Thank you. Talk again.